Welcome back, friends and family, to DeFi channel, and today we have a very special day because this is the first video from our new video series. We're gonna launching the weekly digest. So today we're gonna talk about the market analysis, about the scenarios from the market, where we could go, how we could go, what we could expect. Then we talk about the actions, what we could do, and the risks behind all of those actions, what we could expect. Then we will talk about the strategies. Is actually the combination of the actions, for example, to collect as many bitcoins as possible, or to stay in stable coins, or to use options. Then I will show you my portfolio, my earnings, how much I'm making every month, and where I'm sitting. We will explore a couple more DeFi yield opportunities, and in the end, I will share my own plan of what I'm gonna do in different BTC scenarios, and actually in what scenario I do believe right now. So let's start. I would love to start from the market analytics and what I could say. Last couple days we've been in extremely fear region, and right now we are reclaiming. It's usually happening every time when we have very extreme fear. We are going back. That's impossible to be so long in extreme fear. But basically, I want to say that I seeing a pattern here because as it was last cycle, we had very good, greedy, optimistic feelings on the market, and after that, for at least, I think, a year, we've been in extremely fear, and the fear region or natural. So what I saw here for this cycle, we've been already in extreme greedy regions, and we didn't have for a long time some extreme fear and fear regions. So basically, it's even here looks like we are already in the end of the cycle. Then regarding the institutional rails, like everyone talking about, that this cycle is fully different because we have many institutionals investing in cryptocurrencies. What I could say that we saw very big outflows, but not many inflows here. And then regarding the treasuries, again, guys, BTC and Sol are staying the same, but on ETH, people in the companies buying more ETH in the treasuries, and that's good for ETH. So what I could say regarding the scenarios right now, you see these two lines. They are here not because of the random. They're here because the lower line is showing the 200-week moving average, and the upper line showing a 50-week moving average. So basically, what we could say from the technical perspective, I don't like it. I want to say honestly, I really don't like it, but I have no choice because most of the people are relying on the technical analysis. What I could see here, just only the patterns. So I could say that right now we are in a very dangerous zone based on the technical analysis. Why? Because every time we've been in the dips, we've been touching the 50-week moving average, but we never broken it. And right now we've broken it. That's basically the thing. And usually after we've broken the 50-week moving average, like it was in 2021, we've been reclaiming this region could be a couple months later, and then the bear market starting. So in the bear market, our bottom is a 200-week moving average, and even though could be less, could be even deeper. So that's because I put this line here, and this line showing us the 200-week moving average, and this is the possible price for the BTC in this bear market if it's gonna start. I don't want to be pessimistic. I want to say to you guys that that's could be in a different ways. And from the one side, we have people who do believe in super cycle. From the other side, we have another group of people who are believing in the end of the cycle. What I'm trying to do, I'm trying to be prepared for all of the scenarios. And from my own vision, for this cycle, I already made some money, and I don't want to lose them. So in this region, I want to stay safe, and I don't know what's going to be. So I'm trying to be in stablecoins right now, and if we will reclaim this region and the BTC will be around 105K or even more, I could say that we could continue. But before this, I think the trend is already broken. Not only me thinking like this, if we will open the charts of the net unrealized profit and losses, we could see the same pattern that we already in the end of the cycle. And as you see, it goes from even 2015, 2019, then 2022, and it feels like we may enter the bear market. Again, with the minor capitulation, the same scenario, it's showing us that we are almost in the end and entering the bear market. With the beam indicator, the same, showing us the same situation. Here, I want to stay a bit longer. That's a Bitcoin long-term holder supply. So what I could say, for example, 2018, 2021, last cycles and last stops, we could say that the long-term holders, they are selling during the price growth every time, you see? So the number of long-term holders becoming less and less, and the price becoming more expensive. But here, the long-term holders, they are selling during the price is going down. So what we could say from all of this, the long-term holders, they don't believe in future growth. And that's actually showing us the two group of the people. So one of them, they're new cryptocurrency believers. And the second group of people, that's the long-term holders. And they right now have a battle between each other to stay with the BTC or to sell BTC. And basically that's a interchanging of the capital, like interchanging of the holders. But in the end, we still in the very dangerous zone right now, and I'm trying to avoid very volatile assets. So going next, Bitcoin halving progress. The same situation, guys. We have almost the end of the halving right now, and it's almost the last days already gone, and we may enter in the bear market just on the halving time frame. Going next, people love to argue that the stablecoin supply is growing rapidly, and we may have the continuation of the bull market. But the point is that the last time we didn't have like very big outflow of the stablecoins. It sit on almost the same region, so I don't believe that we will go down here, or this chart showing to us that it is like new upcoming cycle which is going to be forever. I think for the US, it is very, very convenient and effective that we are using stablecoins, because we are paying to each other with ERC20 or TRC tokens. Basically, behind the scene, all of those dollars are sitting in the treasury, and for them, it's very, very effective. Again, the Vanguard just almost released the BTC and ETH ETFs, and they are speaking that the crypto is a very big future for them. This is very, very new, because a couple of years ago they hated cryptocurrencies and say that we will never allow to buy the crypto for our users, but right now they are allowing it, and this is a very good result. In this case, we may have some, let's say, optimistic opportunities, but basically, I think this is not enough. And I think personally that we are in the end of the cycle, even though I think that we have more long-term holders than the newcomers, and we still gonna be stuck in the cycle patterns. In terms of economy, I could say that we seeing the very good growth of the gold, and even let's compare the gold market cap with the BTC market cap. So if you could go here, the coin market cap, the market overview, you will find that the total market cap is almost $3 trillion. But even the gold market cap, 10 times higher than the whole crypto market cap. And this is very, very different, actually. Why am I saying different? Because for the institutional investors, the crypto is still very, very tiny industry. They basically unable to put $1 billion in crypto because it's very manipulative. And again, for the gold, they able to store their assets there because there's a very big, let's say, market and very big market cap. The growth of gold showing to us that the economy is not doing great. So what I could rely on the US dollar index. It's showing to us the strength and the weakness of the US dollar with compared to other currencies. And even though you could see the trend that US dollar unable to reclaim the previous peaks and the previous tops, but right now it's sitting, I think, on the top. And in a couple next even months and years, we could wait for some crisis and recessions. As we know, the US waiting for a soft landing, but I think the AI bubble wouldn't let US to do the soft landing because we have very, very big pump because of the AI and the whole economy. The Fed rates, they are cutting, and it's showing to us that everything fine, almost fine, let's say like this. After the COVID times, we're reclaiming this region, and the economy could be even stimulated. But what also I could say that S&P 500 is reclaiming the region, science, the tariff drama, and even going higher. But again, there is only a few companies driving this growth, and they are technical and AI companies. So they are relying on this part of the industry, and this is not so good. Another one bullish news that MicroStrategy recently bought 10,000 BTC, and it's showing to us that they still have some powder to buy Bitcoins. I've already explained all of this in my platform called DeFi Capital, the link down below. You could find it in the crypto analytics here, and everything already explained in the research. So all of the details there, and every week I'm making new research, new analytics, so you could check it through the platform. Let's go to our drawings. So regarding the Bitcoin scenarios, as I said, what we could have right now, we could have, let's say, we reclaiming. I mean, we, by the letter that we are rapidly reclaiming the 115K region, but basically, same we could expect the capitulation. I don't think it's going to be like this. The reclaiming or the capitulation, the market always loves to surprise us. And usually, if we even rely on the previous past cycles and analytics, right now we're sitting in a fear region. We need to come back at least to Greek, and then the bear market may to start. Because if the market will break the spine of the investor every time they are even feel extremely fear, after that again extremely fear, this is going to be let's say not surprising. And usually the market and the cryptocurrency showing to us the opposite move from our feelings. So basically right now people talking about the bear market. I think we should wait a couple weeks until people start talking about the full day reclaiming, and we will sow back, then the bear market could start. So I believe in following scenario, we could grow up to 109K, and then we could drop to 60K to the capitulation, and the bear market could start. I don't want this, but I think until we are sitting in this zone after breaking 50-week moving average and still not reclaiming it again, this is very dangerous. And I do believe in this scenario. Let's see what's going to be in a week or two. Maybe situation will change, but right now I'm fully sitting in the stablecoins. And what are the actions right now we're able to do? So let's discuss. For example, we could do long on 3x or short on 3x if we do believe that we will reclaim to 109 and then go to 60K. But our risk is the liquidation of the full deposit on two of these cases. But our wins, we could won up to 100% from our deposit. We could do even better. We could do the long firstly and the short after. Again, the risk is the full deposit, but the upside up to 200%. What I want to show you by making this example, that always when you are doing anything, any action, you need to understand what are the risks. And you need to build your own risk framework to fully understood, are you able to win or lose, and how much? Because sometimes it could be that you are making irrational actions and your risk reward is not balanced. So you have more risks than reward. For this, you need to understood every possible scenario, what could go wrong or what could go good for your action. Then if we open the option, we will lose only the premium payment if something will go wrong, but we will be able to earn up to 40%. If we will do the spot buying and selling, the risks are very moderate and we are able to go up to 20%. Again, we will lose up to 20 or 40%, depends on the deep on the bear market. And if we will sit in stablecoins, it's going to be safe for us, but no P&L. Or we could put assets into yield farming, but still we could earn not much. It could be like 10 to 20% APR yearly. That's the point. So that's a very important part. Please, if you're doing any actions, understood the risks. What are the strategies right now could be according to this situation? So basically, what we could do the DCA, dollar cost average. We could start buying BTC every time when it's falling down. And then, for example, it could be more than 3 times. We will, let's say, divide our deposit only to 3 parts, and we'll buy BTC each time when it's falling down. After the 3rd time, we could start using the Llama Land. That's a leveraged lending protocol from Curve. And we could open there the leverage, and we could still have a buying power after 3rd, after 4 times, even after 5 times. You could check my useful templates here. This is actually the template of how to use Llama Land, based on which I earned 100 and almost 150K, and I'm showing the transactions with the proofs that I earned all of those assets. So this is not just the screenshots, this is a fully on-chain proofed template of how I use the Llama Land, but still this is very risky tool. So then what we could do next, we could buy BTC on the full deposit, and we could hedge it via the options. That's one of the good ideas actually, because if you are using options, you only losing the premium payment. So every time you could hedge your BTC purchases or BTC holdings with options by losing the premium payment. So you're never going to lose more than the premium payment, but still there is a point because options have the maturity date. So you're only able to hedge for next 3 months or next half of the year or next year. Then what we could do next, we could, if the bear market is going to be very soon, we could prepare and short that altcoins to BTC. But the most important thing to do it to BTC, not to the US dollars. Why? Because BTC could reclaim some regions and we're going to be liquidated, but this is very good strategy. What are the dead altcoins? XTZ, Atom, Ton, Polkadot. You could create your own list. I fully believe in you. Or the last strategy, we could stay 100% in the stablecoins and invest them into the DeFi. But what I do think the right way is to combine all of these strategies and make your own plan what you're going to do. Because you shouldn't saying that I will survive in a bear market. You need to earn in a bear market like in a bull market. That's the case. So regarding my portfolio, what I'm doing, where I'm sitting 100% in stablecoins right now. I do have 210K US dollars. And the idea actually of the portfolio is showing to you how you're able to earn or lose on a real example. Basically, we could go to the DeFi Capital, open the portfolio reports, and I'm doing reports here. I started from 100K a year ago, and right now is 220K. I'm showing you my winning and my losses, and everything is reported on chain. You could check how it looks like. You could check all of the addresses. You could check my motivation, what I'm doing, where I'm sitting, what are my positions. Everything explained here. But right now, I'm sitting in a stablecoins, and why? The reason because it is very unsafe, and this zone this time and the market very dangerous. So I earned already 110K and I don't want to lose it. So I have very good portfolio, 220K. I just don't want to lose it. Regarding my stocks portfolio, I do invest there 10K. I have already 12. What my categories? So it's semiconductors, batteries, and defense and electric vehicles. So that's the categories in which I do believe. The companies and all of the explanation why I choose those categories, what are my investment plan, what are the tools I'm using, I'm showing in my stock investments reports on the DeFi Capital platform. So we recently launched this category and we already have results here. Just log in, open, and you're going to be able to check everything here. Going next. So as I said to you, my portfolio are sitting in DeFi. I mean the crypto part, which are in stablecoins. And I'm using Syntropia. Syntropia, that's on-chain asset manager, which actually helping you to manage the stablecoins by providing them into different farming opportunities, collecting the reward for you, and even protecting your capital from some risks like a DPEG risk or economical bugs on the different farming opportunities. But basically, Syntropia is using open farming tools like StakeDAO, for example, or Convex, and let's do a little bit of the review of what is possible in the market right now. So from the StakeDAO, you could provide assets in FRX USD, CRV USDT, CRV USD, USDC from 8 to 7%, even though we have some ReUSD, CRV USD almost 10, MSUSD, FRAX almost 15. I think the same, almost the same situation should be on Convex. So let's check here. Yeah, there's a ReUSD, CRV USD. Going to be projected 9.8% on the next week. So you could go through all of these farming opportunities, but for me, Syntropia is the best way because the asset managers in Syntropia are doing everything for me. The same, we could do review on the Pendle Finance. What we saw here, we have USDI 13%, but still good, still good, still good. We have from Athena SUSD and USD from 5 to 6%, not so good, but still USDF 8, Midas USD 13, ReUSD 26, but the market gonna be ended in 2 days. So yeah, actually, if you are doing it yourself, you need to check the markets and you need to be prepared for different risks. For example, one of the risk in DeFi, that's the reward volatility, because you're always receiving the reward in some fancy token and you need to sell it every time and you need to monitor the price. Then there's a logs and fees. Every time you're doing it yourself, please do it only on the $10 and withdraw after you invest to understand if there's any hidden logs and fees. There's also could be some wallet hacks, some stablecoin DPEGs because of the economical problems. And we are in Syntropia are handling all of these risks because we have our own risk mitigation framework. So the only one risk we're unable to help is smart contract hacks. Basically, no one on the market unable to prevent the smart contract hack. If the assets are stolen, they are stolen forever. Unless USDT or USDC will block these address or the hacker will return the assets. Hopefully, right time, there is good conditions on the market and hackers prefer to be more white and they are returning some assets. So that are the risks, and you always need to understand that there is no yield without the risk. It's just the world rule. In any market, there is no yield without the risk. What are my personal plans? So guys, I will wait until BTC hit 109k, then I will buy the put option to short BTC. I could lose the premium payment, but still I wouldn't lose the whole deposit as I'm doing the same by shorting BTC on the perpetual futures or a decentralized lending protocol like Llama. Options here is a very good way. You're only able to lose the premium payment. Then every month I'm investing 5k into the stocks and equities, through the interactive brokers and doing the reports. As for the portfolio on crypto, the same for the stock market, and I'm sharing updates with you. And this is our first weekly digest. See you in a week.